What's up, everybody? Michael Johnson here with the Business Choreography Podcast, and I'm excited you joined me today because we have another special guest joining us to share their wisdom and their journey. Today, we have on the show Jody Grunden. Jody is the co-founder of Summit CPA Group, a trailblazing firm that pioneered fully distributed operations and became the top provider of virtual CFO services in North America. In 2022, Summit joined forces with Anders CPAs and Advisors, rebranding as Summit Virtual CFO by Anders. This merger brings numerous advantages to Anders, aligning with Jody's vision of changing the way people think about accounting. And I can't wait because you know what? We all have some interesting views on accounting, and he's going to help us with that today and share his wisdom with us. So let's cue the intro and we'll jump right in. Listen, there's a lot to learn when growing and scaling your business.
That's why we created the Business Choreography Podcast, where we talk about choreographing your marketing, operations, and sales into dynamic systems that increase your revenue and your impact.
We'll explore solid business principles and discuss all things that make businesses dance to success with clarity.
We'll help you figure out where the holes are in your business and what you can do to fix them. Think of us as your official business choreographers, aka your insider growth strategists.
Remember, your choreography matters. Welcome to the Business Choreography Podcast. Jody, welcome to the show. Thank you so much for joining us today.
Yeah, thanks, Michael, for having me.
Absolutely. Excited to have you here and glean some of that wisdom and some of that journey. I'm sure it's going to help us all. So we've got to start with, you saw the intro, and I always love to kind of put people on the spot. What do you think choreography has meant to you and your business journey?
Oh, geez. Choreography. So I'm thinking about choreography, like talking about dancers typically, and how they, basically, the choreographer creates the dance moves, the plays, the musicals, that sort of thing. And I would say, if you look at with the virtual CFO that we put together, 10 years, 20 years ago, it's kind of a similar type of thing, but just with businesses. And so we're helping businesses and helping them map out the plan and the forecasting side, and really kind of help them take the next level. We don't do the work. We're not the dancers. The business owners are the dancers, but we give them that financial acumen that enables them to make those informed decisions.
I love that. That is awesome. Well, cool. So we've got to go back to the beginning and how you got started to get to that point, because that's some cool stuff. And we're going to dig into that as we get in. But I want to hear the winding road, the journey, the ups and the downs, and hear about what got you started in that and how the heck did you get here?
Oh, geez. What, the long version or the short version?
Oh, well, you choose.
So, basically I started out in public accounting, and I thought that was what I wanted to do in my life. I worked for a pretty large accounting firm and realized pretty quickly that the hours, it just wasn't made for me. It wasn't conducive to a family. And so I thought, well, heck, now I've got this CPA license. Let me try this corporate world. And I joined a $250 million corporation, great company, dove right in as tax analyst, and basically actually did all the taxes and did all the money movement for this multi-million-dollar company, and loved it for the first couple of years. Then after a while, it just became like Groundhog Day. It was like the same thing over and over. And I thought, wow, what did I do to myself here? I didn't like public accounting, I didn't like the corporate world either. So what did I do? Did I get the wrong thing, wrong degree? And I thought, the entrepreneur kind of came out, and I got this opportunity to run an office for a regional firm and try to kind of a little bit of my own, a lot of my own stuff, and quickly realized that I am definitely not a hireable person. So I thought, well, let me start on my own venture here. And so about a year into it, I thought, hey, let's start with my own venture. Let's create something a lot different than a traditional public accounting firm, because I really enjoyed public accounting. It was just the hours killed me, and the family life. And here I'm a coach for my kids. I coached hockey, coached both my daughter and my son throughout, from 4 years old all the way through to junior high, and then they kind of let it go from there in some way, right? And so it was one of those things that hockey's during tax season for accountants, and it's like, how can I possibly ask somebody to work a bazillion hours, and here I'm taking off early at 3:00 to go to the ice rink type of thing. And so I wanted to change, really the way that people thought about accounting. And there's a lot of different methods and thinking, through that, what our team thought about accounting. I wanted to think what the industry itself thought, what clients thought, and And I started off thinking that's a great idea. And then I figured out I've got to make some money. And so I dove right in and did what everybody else did. I did the traditional tax and audit work, not audit, but tax and accounting and write-up and all that kind of stuff. And I billed by the hour, just like all accountants did, and some of them still do. Actually, a lot of them still do. And then I realized that, this is the same thing that I got into before. I was the public accounting, the corporate. Now I'm an entrepreneur. I'm doing the same thing everyone else is doing. So I'm like, how can we change, and how can we actually make a difference for these companies that we're actually working with now? And also do it in a way that our team isn't working a lot of hours throughout the year and so forth. And so we changed our dress code right away. We were not wearing suits anymore. We're, dressing down. Which back then that was a complete mortal sin.
Right.
20 years ago, you had to have suits and ties and all that kind of stuff.
Right.
And, we changed the way that we actually gave everybody Fridays off, and we said, hey, here's what you need to work on, and really kind of created this roadmap. And we took some of our really great clients and we converted them into what we called Virtual CFO Services. And, what did that mean back then? We just kind of made it up. We didn't know, there wasn't anything like it out there that we could tell, because
Sure.
the internet wasn't going great. And, so it's not like you could search everywhere. But what we wanted to do is we wanted to sit alongside the owner of a business and really kind of help them and guide them, like you had mentioned before with the choreography. We wanted to help them, guide them through the journey and be that financial acumen, so they're not just, on a whim making bad decisions. And so we started this route and we thought, hey, this is a great idea. How can we do this without charging hourly? And so we came up with this subscription-based billing model, which was basically solved it. And we set a flat fee and based on different metrics and stuff that we put together, and then we charged basically every week, same dollar amount every week, and clients loved it. It was like, wow, no more of these bills that I'm getting a surprise. The worst thing you can do is give a client all this great stuff and then they get a bill and they never call you back again, that type of thing. And so we got rid of that system. Again, people around the world said, you're going to fail. This is not going to work for you. And it just gained momentum. The nice thing about it is it took away all of our accounts receivable. People didn't owe us money anymore because we got money right up front, and we actually got money prior to even starting the work. And so it was really nice. And what we did is we focused on initially cash flow forecasting, where we actually met with them and looked over the next 13 weeks and kind of guided them. And here are the inflows and outflows. And here's what your cash position is going to look like every single week going on. And then we could kind of guide the discussion, hey, it looks like you're going to be short in 3 weeks, or, hey, it looks like you're cash heavy throughout the entire time. Everything's looking great. And we can really kind of help them make those and think about the actions that they're taking now. And, they loved it. Clients were like, this is great. Never had this before. Of course, all big companies have had it. Heck, I stole it from the company I worked for before, right? That's what I did for them. It's like, well, so I brought that down to a company that's $1 million. And a lot of times it was below $1 million at that point. Now it's $1 million, a $2 million company, 3, and so forth. And with that, it was really nice because they really enjoyed coming to the meetings. It wasn't one of those things that they're like, oh, I got to talk to my accountant, and then they glass over and they're doing other things. And it was really nice, informative, engaging meeting. And we really walked out of that with a plan. Hey, here's what's going to happen, and they couldn't wait really to come back. And they so much so that they said, hey, can we meet more often? And I'm like, well, of course we can. And so we thought, well, hey, let's meet weekly. And so we changed our structure a little bit, and we started meeting with clients on a weekly basis, sitting alongside them in their leadership meetings, guiding them on the strategy and all that kind of stuff, and really being part of the decision-making process, which is really cool because I enjoyed that part of it in the corporate world. That was the funnest part about it. And now I'm bringing it in, and now I'm doing it for 10 companies. It was like, or 15 companies. Like, this is neat. And, so it was just one of those progressive things that it kind of morphed into. What we do today is meet with them 4 to 6 times a month, meet with them, maybe we also might meet with them another time each week for cash flow. And we talk about pipeline and revenue rec and all these different things that, again, they would not have that ability with a smaller scale there. And so we continued on that process, and this virtual CFO thing was great. We were picking up 4, maybe 5 clients a year, high-fiving every time we did it. And we realized pretty quickly that, hey, this isn't going to scale. We can't do this. And again, the internet wasn't really going strong, so we were doing it face to face a lot of times, driving out. It was just like, oh, we got to figure this out. I don't want to be doing this. The idea is growing a business bigger than me, not being part of the business type of thing. And so we really figured all these different ideas out, and it was probably, I would say probably until about 2009-ish that we really started kind of figuring out the pricing and how to make it work. So it took us a long time. And here we're an accounting firm. This should be like our bread and butter, right? This is something we should be great at. And it was like we're doing it ourselves. It was like, we always underestimated how much time it was going to take. And we always underestimated how much people were willing to pay for it. And so it was just a kind of a combination of both that was really, hindering us. And it wasn't until we actually started focusing on a vertical and outside of the CFO vertical that we were already in, but focusing on an industry vertical that we really saw revenue just like, oh man, it just like picked up like a hockey stick, really, really high. And, we went from, 4 to 6 a year to, we picked up 11 in one month, 7 the next month. It was just like boom, boom, boom. And it was like, oh no, now we got our new set of problems here. A new set of problems is how do we staff this? Because I sure can't do it all. Don't want to do it all, and it's like, and so it was one of those things that it just happened at the same time. We decided to go fully remote and get rid of the office, which that's a story in all in itself. But we decided to get rid of the office 10 years ago. And with that,
wow.
The big blessing about it is that Forbes wrote an article that appeared in Forbes, and it listed the top 125 or 150 firms nationwide that have gone remote. This is not just financial firms. We're the only financial firm. This is companies, period. And it was like, wow, this is kind of neat. But what it did, we got instant resumes. We had about 2,000 resumes within it was like maybe a day. It was unreal. Yeah, I was actually in a client meeting. It was kind of funny. I was in a client meeting, and we always have another person in the client meeting with us. And so the two of us are talking back and forth. Then all of a sudden, my email just was like, ding, 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 ding. It was every like second and a half, a new resume popped up. And I'm like, oh my gosh, it was so distracting. Clients like, hey, do you got to take care of that? I'm like, I have no idea what that is. I think I'm getting spammed. And my employee's like, hey, do I have anything to worry about? I'm like, no, not at all. And found out that it was that article, and they were all original emails. And so it was one of those things that we decided to go remote, get rid of the office at the same time. It was something nobody was doing. Obviously, it was something that was, again, there was only 100 plus companies in the world doing it. And it really opened up the avenue of, hey, here's how we can scale vertical. We got this vertical. Here's how we can scale now with employees, because we're remote. We can hire anywhere now. And how are we going to do it? Don't know. How are you going to hire people out in California when you live in Indiana? Well, the Forbes did it. It blew up our website, and basically all these different people are applying for jobs. And it allowed us to really dig in and really learn, hey, we can definitely scale this thing and really grow it. And boy, from 2010 and all the way through until we merged with Anders in 2020, we doubled our revenue every 3 years. It was like a constant double, high growth. And the nice thing about it, we were able to figure out our profit margins, because before we were picking up just about everybody that we tried to. Anybody that called us, yeah, we can definitely do it. We were probably 80% close ratio on all of our clients at that time. We thought that was a great thing. And actually, that's not a great thing. And, so we had to be more selective. And when we started increasing our prices, to maybe it was $30,000 at the time. No one's going to do 30. And then we still had 80% close ratio. Then it was like, well, we got to slow this down. 50,000 engagement, 60, 70, all the way up to about $90,000, where we started actually shrinking our close rate to about 30 or 40%. Then we think, oh, now we can kind of take a breath and, and actually start working with these clients and working with a fewer amount of clients and spending more time with them. And that was golden. And it really kind of helped us shape things through the entire process. And so, it was definitely kudos on that journey through that process there. But then, things really didn't, it seems like every time you get into a rhythm, you think, oh, this is great. Mother Nature throws you another freaking roadblock, right? Or a big boulder out there for you. And that's exactly what happened. We hit the pandemic. And here we are, we're humming along, and sales kept humming along. No problem there. We kept picking clients up. We kept picking employees up, which was great. And we thought, oh, this is great. This didn't impact us at all. Or like, this is a great thing. Not the pandemic, but the fact that we basically we're able to work around such a big issue. We thought was really, really solid. So much solid that we were able to give clients, time off, because again, it's a subscription-based billing model, right? And so it's like, hey, we're going to halt your fees for 15 weeks or whatever, allow you to get caught back up. And it was a cool process. We were able to do that and really help clients out. But the one thing we didn't realize, it was like, oh, geez, after the pandemic, here we're fully remote. We used to go to our retreats once a year. During that whole period of time, we weren't able to go to a team retreat. We weren't able to connect. And we had everybody that we hired, probably about 4 months before that and throughout that entire pandemic, left the firm. Right after about a year or so later, it was like, oh my gosh, what happened? And they were getting poached by people all over the place. Sometimes it was by a little dollar amount, but sometimes it was by a lot. And because we were a company that everybody knew that had been doing this for so long, why not poach people from us? We're nationwide, California, New York. It was pretty easy pickings type of thing. And so we thought, oh, now what are we going to do? Because that's a big, huge, like, we got a big, huge danger alert here. And so we had to kind of figure it out. And so we started changing the way that we paid our employees.
Wow.
And it worked out really well. We created a base structure and then a monthly incentive comp. Because what we did is we took all the different surveys we looked at. We took, you see them all over the internet, what people pay. We took the bottom and the high, and we said, you know what, we're going to pay everybody in the base in the middle, but we're going to give you the opportunity to actually achieve that high no matter how much experience you have. And it was like, well, what does that mean? It's like, well, we're going to base it on the volume of book of business that you're actually managing. So if I'm 2 years out of college or 5 years, it doesn't make any difference. If I'm managing, let's say, this $800,000 book, and you've got 20 years of experience, you're managing the same book, why are we paying you differently? Let's pay you the exact same amount. And so it allowed people to really be autonomous, allowed them to kind of pick and choose how much they wanted to make. But what it did also, which was really cool, it allowed them to pick and choose how much time they wanted to work or how much effort they wanted to put in, to a certain point. Because we told everybody, hey, here's your minimum based on your salary. Here's what your minimum is. If you want to work more than that, great. If you don't, that's fine too. But you'll be compensated, and you'll be compensated every single month based on it. And so it was like, wow, this is kind of a neat thing. And they loved it. It just gave them the autonomy to do whatever. If I want to be a coach and coach hockey and not worry about, certain things, I could rearrange my schedule in order to manage that and not feel guilty or have that guilt put on me for not having to do that extra stuff. And so, it was just one thing after another. It was like, wow, we got this new obstacle. Here's the solution. And man, it's like reading a lot of books and doing a lot of research and staying up late at night trying to figure it out. But we did. And it brought us to the opportunity to merge with a top 100 accounting firm in 2022, which we weren't even looking for at the time. And it's just one of those deals that, wow, this is a great opportunity, because they came to us and said, hey, keep your team intact. We want you to do exactly what you're doing. We were at that point $10 million in revenue, high profit margin, and we had a great team, great brand. Our brand was solid, and they said, hey, let's don't do anything different. Let's keep you together as a unit, and I want you to go from 10 million to 50 million, and we're gonna be the backbone for you. Are you willing to do that? I'm like, yeah, let's do it. It's like because I was to the point where kind of just guessing, hey, what's my next thing?
Right.
When do I want to eventually sell? Because all entrepreneurs eventually want to sell, right? And so when do I want to eventually sell? What am I going to do? And I was getting to that $5 million mark, and I thought, 5 million is the key. I'm going to sell there. Then I got the 7. No, 7's the key. Then it was like, no, 10's the key. Then I'm like, well, shoot, now I think 20 is the key, and that's going to happen in 3 years anyway. So, and then they came to me and said, hey, we'll do it in 50, and let's make the same amount of money. So you're not out money, but let's grow together and really kind of make this and really snowball it. And it was a great opportunity. We did the merger, had really no casualties of war, meaning, everybody stayed intact on the team.
Wow.
The two different companies were great in the regard they had very similar values, and it just worked out really, really well. And so happy we did it. And now that my next venture is, hey, let's take this thing. I'm a partner in the firm now. Let's take this thing and let's build it to that $50 million mark, and keeping that great employee satisfaction and client happiness and, all that kind of thing. So that's kind of my new venture.
Wow. I love that story. Holy cow. Hey, so many people, I think a lot about this idea of building from scratch and doing the thing that they know, their art, and they are afraid to make that move. And I love, especially the beginning of your story, just that you were like, okay, I want to do what I love, which is partially stuff in the business, but also, being with your family. And I think so many entrepreneurs, business owners, they want to do that. And sometimes they don't actually go and create that. So I love that you created it. And I love that you put that together. And that's super inspiring. I have a ton of questions. I'll try to keep them.
Let's do it.
I'll keep them narrow for you. One that I'd like to dig into is, you said that you wanted to change how people thought about accounting. And I talk to a lot of people, and accounting is almost always one of those things that comes up that they're like, oh, I got to go do the accounting for my business, or, oh, I have to go talk to my accountant and get this sorted out. And it's always this like heavy weight. And I almost feel like it's also become a blanket statement that not everybody really actually knows what it means. So I want to dig into that just a little bit and talk about what things you were changing about what people thought about accounting, and what you did to change them, and what it actually is now that you've had your influence on it.
Oh yeah, for sure. Because when I worked in the corporate world, it was like, we got these financial statements usually a couple months behind, and we got it. The accountants were so excited about it. They gave it to us. We looked at it and we put it in the drawer. And rinse, repeat, right? It was like, it was just old information, not good, nothing we could really act upon, that sort of thing. And so then when I started the firm up, it was like, okay, so, it was, you had to do whatever, right? When you first start a business, you're working a ton of time and hours and all that kind of stuff, really grabbing anything you can. And with that, it was like, okay, well, we got these taxes, and we're spending all this time on these taxes, getting them, and they just cared about how much money they got back, or how much money they paid, that type of thing, or the net income. When we put together the financials, it was like they didn't even not know how to read it. And so it was just more of a chore for them, because they didn't know anything about business anyways. They just thought they had to do it. They didn't know why. And a lot of times they didn't even show up for these meetings. It was like, you'd go to a meeting and they had 10 different reasons why they couldn't meet with you. And at that time I drove to the client. You drive 45 minutes and they're not even there. It's like, seriously, all this work and effort I put forth and they're not there. And so we had to figure out, hey, what can we do to really make this enjoyable for clients? And that's when we thought, hey, let's not talk about the financials. Well, first of all, let's get them done quickly. Let's get them done within the first 10 days of the month. So we've got actionable things we can actually talk about. And then let's really kind of turn it on its top, and let's talk about how those numbers really impact going forward, and something they could be actionable with. And let's not talk numbers. Let's talk about non-financial stuff. The perfect example I use, and I use it a lot, is that I've got this, my son played baseball through high school, and had this great coach, a great baseball academy. And now we started doing their stuff for them. We started helping them out and really helping them develop that business acumen. And when it started off, it was like, hey, I just want to do this and this and this. Like, the client understood exactly what he wanted. In reality, he had no idea what he needed. And so we're like, well, hey, let's do this instead. And so what we did is, let's take this next year and let's build out what you're going to do now based on the end of the year. And he's like, well, how are we going to do that? And so I broke it out. It's like, well, how many teams do you have? How many teams do you have in your organization? How many people per team? What are the memberships per that? Are you going to be doing, lessons with these people? How many lessons, what percentage are you going to do lessons with? And then we just broke everything out, all the way down to snacks. Do you have a vending machine that you're going to make money on? How much revenue you're going to make from that? And really kind of broke it out month by month by month based on non-financial stuff. And it was like, the light bulbs are starting to go off for me. It's like, oh, wow, this is kind of neat. And then we then put down all the direct costs involved, which is fairly simple for him. It was, the people at the, the front and doing the lessons, we kind of broke that out for him. And then we just threw in the administrative and the facility marketing costs based on when they typically hit, not spreading them out equally throughout the year, but when they actually hit. And then it came out to, hey, here's the net income you're going to make, which again, net income, people have no idea what that even means. So you flip it over and say, okay, here's the cash you started with at the beginning of the year. Here's how much cash you're going to at the end of the year if you don't take any money out. And it was like, wow, okay. And the first time we did it, he's like, well, that's not a ton of money. And I go, well, have you been taking a lot of money out in the prior years? Well, no. I go, well, let's change things around a little bit. Okay, so then we started changing around, saying, hey, what? Let's add. Do you think you could probably pick up one or two more teams? Yep, definitely can do that. Okay, two more teams. Do you think you could probably increase your membership fee from $200 to $250? Oh, no problem. Yeah, we haven't increased memberships in a long time. So I'm doing all these right in front of him, and boom! Now all of a sudden he sees this. Okay, let's take a look at it. He sees cash going up significantly, and he's like, "Wow, okay, well that's cool." And so now he's actually getting a good picture on how things are happening in his business. And what a lot of accountants do, because a lot of accountants can do that, right? But a lot of accountants do is they don't follow through. And so what I mean by that is we ended the meeting, high five, this is great. Now life hit, boom. What happened this last month? We took a look at our forecast in this next meeting and we're like, oh geez, why did the cash go down so much? Well, it's because this month impacted that so much that it went down. So now what are we going to do? And so now our target's changing here. And so now it becomes a game of Sim City or whatever. You're actually kind of looking at and designing what's happening throughout that entire year. And clients just started loving coming to these meetings because we were talking about things they could actually control. They can't control a 10% increase in revenue. No idea how to do that.
Right.
I don't have any idea how to do that, but they can control how many new clients are coming in, how much we're getting paid, when they're getting paid, and all that kind of stuff. And it was really nice because then clients could come in and actually see what their tax position was, which they'd never had that exposure before too. It's like, hey, you're in April and you're saying, oh, by the way, here's how much taxes you're going to owe next April. And they're like, what do you mean? It's like, well, if you hit these numbers, here's what it's going to be. And then you adjust it every time and they could see their tax position going up and down. And so when it became April, it was nice because we weren't when we did the return, it wasn't like, okay, where is it going to end up? It's like, well, it ended up exactly where we told them it was going to end up. And they're happy. They put the money aside and it made it just such a great relationship and conversation to where very, very, very rarely, I would say, if any, clients ever miss meetings, and they do enjoy coming to them because it's something they basically now have control of their business.
No doubt. So you talk about a virtual CFO, and you've kind of explained a bit of how you have changed people's view on accounting, and I really appreciate it so much because we didn't all go to school for that, and we didn't all fall in love with that. I think originally my first accounting class in college, I think I failed. I can take it again, but the concept of a virtual CFO, I think I'd like to just ask for those listening, when do they know that a virtual CFO is needed, right? When do they, what are some of the key points, what are the key indicators that they're like, okay, I really do need to have a virtual CFO? And how can a virtual CFO actually help me? Why would they not just get somebody to come in-house?
Yeah, that's a great question. So when do they need a virtual CFO? Well, they need it from the very beginning, obviously, but they can't afford it. And they've got to actually figure that out themselves. They've got to be able to figure out how their business runs and go through the lumps and the pain points as they go through. And usually that happens between that $0 mark to the $1 million mark is where they're like, okay, I'm ready to go on and do something different, meaning do something I'm better at in my business than actually doing the day-to-day stuff or doing things that I don't enjoy or are not good at. And so the $1 million mark is typically when we see clients or prospects give us a call. Maybe $1 million, $1.5 million, somewhere in that ballpark. We don't typically want to hire people below that because we will be their biggest expense. I just told you how much we charge, a lot more than we charge not as much as what a CFO would cost, but we charge a significant amount of money, and we don't want to be that. We don't want to be that expense. It's just not fair to them. And so with that, we typically see about $3 million mark is where they start developing their leadership team, they're getting and pulling themselves out. The $5 million mark, definitely. And so I'd say about the 3 millions when they really start seeing that happen, and they see the need for it. The nice thing about it is we're significantly cheaper than what a CFO would cost, which is nice. You're going to spend a good $200,000 to $300,000 on a good CFO, and we're gonna our average fee is going to be about $90,000. So that kind of gives you an idea, what that would be.
Right.
But with that, they also have to determine, hey, do you have somebody doing the accounting below us? Do you have somebody paying the bills and receivables and so forth? And you usually have that or groom that up within it. And so the nice thing about it is we can sit over top of that individual and really, oversee that person, or we could be that person if they didn't have that in place. And so it really depends on the maturity of the business and who's really doing the work. If they've had that same person all the time, or if that person left and they need to replace it, it really kind of gives an idea of what we would actually go into. Because about a third of our clients, we do the transactional stuff. We'll do the payroll administration and expense and spend management stuff and all that kind of stuff for about a third of our clients. But the majority of our clients come to us already have somebody like that in place, and we're just simply helping out with the forecasting, KPIs, dashboarding, bank management, bank relationship management, profit sharing, all that kind of stuff is held there. So I think that kind of gives you an idea there on the range. When you get to that $20 million and above, it starts getting to a point where they could potentially hire somebody in staff, and they could really kind of generate it. And we typically see clients, I would say probably when it gets actually closer, because when you get to that 20 million, you're at 30 million really quick, and you're at 50 million even quicker for a lot of clients. And we see that we actually become what we call FP&A analyst alongside a CFO that they might be bringing in. So a lot of times they'll bring in a junior CFO because they're shell shocked how much a good CFO is going to cost. And so we sit alongside that individual and kind of groom them and help them through the process to $70 million and up until eventually it's not needed anymore. But the nice thing about having a virtual CFO, it's you've got a team underneath you. It's not just one person. It's a team of individuals helping you versus that one person you're going to have in-house.
Right. And you're getting massive leverage.
Mm-hmm.
Like you said, with that team, you're not just relying on the one person, but getting the insight from many. So that increases the possibility that the advice is even more sound than from one person.
Yeah. Oh, exactly. And especially if you niche into a specific vertical,
Sure.
And now you've got multiple CFOs working in the same vertical, because our CFOs meet all the time on a regular weekly basis, sharing ideas, what happened, what didn't happen, with the client base. And they do that so that they can learn from each other and provide better advice. And it works out really, really well. Niching, I would say, is probably one of the biggest things that we've ever done, not only on the vertical side, on the service line side, but on the industry side. It was a game changer for us and for our clients.
I love that. Gosh, this is such an important topic and so valuable for our listeners to dig in. Share with us how people can connect to you and find out more about your services and what you've done. Obviously, you are the leader in the industry for virtual CFOs, and it's thrown around a lot these days. You clearly were on the forefront of making it happen and making it come to life. And how cool is that? I mean, I hope it's a little flattering that everybody's tried to copy it and do it now. Seems like a more normal thing. However, coming to somebody that really pioneered the process is really cool. So how can they connect with you and get in touch with what you're doing?
Yeah, so we've shared all of our information out there on how to actually do, for accounting firms, how we do it. And then for, basically companies, here's what you need to do to be profitable and stuff. So there's a ton of stuff out there on the internet. If they want to go right to our website, it's summitcpa.net. It's .net instead of .com. Couldn't afford the .com, so it's right there on the screen. SummitCPA.net, and you should be able to. It'll direct you to a lot of different ways. We're in YouTube. If you Google my name or Summit on YouTube, you'll see a plethora of definitely educational emails. We're on podcasts. I think we've got 4 or 5 podcasts going on at really any point in time to really educate the industry and really help you better run your business.
That's great. I love that. Guys, go check out summitcpa.net. Obviously, something that can really help you and really make a difference. I appreciate so much that you came and shared with us your wisdom. I had no idea that you were the pioneer in the industry. That is amazing, and so appreciated, because that's the stuff that we need, the innovation that's really going to help all of us as entrepreneurs get into that next space. So I appreciate that, and appreciate you sharing your journey with us. Before we head out, any last words of wisdom you want to leave our listeners with?
I think the biggest thing, and that I learned really quick, is that if you're an entrepreneur, follow your dreams. Don't let people tell you can't do something. Look for different ways. When we started Summit, there, everything we did, you'll fail at that. You'll fail at that, and it's not going to work. No one's going to allow you to automatically take money out of your bank account every month. That's not going to happen. Stuff that we normally do now, it's like not a big deal. Netflix. You see that's happened from the beginning. Subscription-based billing model. No, you have to bill by the hour because you're going to lose so much money because people are going to take advantage of you. It's like, no, people don't take advantage of you. All that kind of stuff. Just feel free to, just take that risk, take that leap of faith. The worst thing that can happen is it doesn't work. That doesn't mean the end of things. You just try something different. But you'll never know and never learn unless you take that risk. And so I'd say, as an entrepreneur, do not be afraid to take a risk and just continue with perseverance throughout the journey.
I love that. Well, thank you so much for joining us today. Hey guys, don't forget, keep working on the choreography in your business. That also means with the virtual CFO. Don't forget that. We'll see you guys on the next episode. Take care.
Thanks for joining us today.
Want more business choreography?
Check out our website at bizchoreo.com to find out more.
And find out how the choreography for your marketing, operations, and sales can raise your revenue and create more impact.
Remember, every business needs choreography.